Officers Adda 247 class. So I hope everyone is good and well, and I am hoping that everyone has started your preparation for upcoming exam of the JIB. Okay. So before to start, I would like to say like this video, hit the like button on this video and share this video to your friend so that maximum number of our friends, colleagues can join with us and can grow our family. Okay. So just share to your friends and colleagues to like Officers Adda 247 YouTube channel, and download the Adda 247 application and subscribe the Officers Adda 247 YouTube channel so that you can get notifications, you can get regular update from our side. Okay, so now let's start today's session. Before to start, I would like to say, our target batch is started and PPB and LRB classes is just started, and your AB class is going to start from the 11th of April. So there are some key highlights like what the you things are going to get. Okay, so you are going to get in this batch like multiple mock tests, multiple ebooks, multiple, you are going to get 130 hours plus live classes where you can directly interact with us. If you find any problem in any chapter, you can easily solve in that class. Okay, so you are going to get everything in this target batch, as well as you are going to get a perfect study plan, and whatever the sessions we are going to take, that all are fully exam oriented. Okay, so that's the very good quality of this batches. So I hope everyone is just going to enroll. And the one important thing also I would like to say, because this is just your financial end week, and that's why we are offering 80% discount on our batches. So I think this is the very big discount, and I think everyone should enroll in the batches, in the multiple batches of JAIIB and CAIIB. Okay, so you can enroll and you can just going to get flat 80% off. And one important thing I would like to say, if you are going to purchase from the your mobile application through Adda 247, so extra 1% off you are going to get. And the coupon code, that is Y422, you have to just apply that and you are going to get a big discount on the any jab and care product. Like you can just enroll in any mock test, you can enroll in any ebook, and you can enroll in any batches. Okay, so now let's start today's session. So today's session is about foreign exchange arithmetic. And in the foreign exchange arithmetic, what is the foreign exchange arithmetic? What is the purpose? What is the need of the foreign exchange arithmetic? We are going to understand in this particular chapter. Okay, so let's start. So in this chapter, we are going to understand what is foreign exchange arithmetic, why we need for the foreign exchange arithmetic, how to do questions of the foreign exchange arithmetic in the examination. That all we are going to understand. Okay. So whenever we are talking about foreign exchange arithmetic, so basically in this chapter we have to understand that conversion of the currency. Okay, that we have to understand conversion of currency, right? Like any currency, just convert into another country's currency. So that all you have to understand how it take place. Okay, how it take place through the bank, right? So basically it is a mechanism by which a bank, if we are talking about this is a bank, and how if we are talking about, like, it is a mechanism by which a bank convert the one country's currency into another country's currency. So that is all about the foreign exchange arithmetic, right? So suppose that if we are talking about, like, bank is conversion, like bank is converting the Indian currency to US currency. Okay, so that is actually we have to understand in this particular chapter, right? Now just understand with the example, if we are talking about any international trade, like this is a international trade, and in the international trade we know that there is a importer and there is a exporter, right? So in any international trade, like there is an importer and exporter. So suppose the importer just want to import any kind of the goods from the exporter country, and this exporter actually belongs to the USA, and this importer is actually belongs to the India, right? Now this trade is going to be done like in just India just import any kind of the thing like from the USA, And now the problem is like exporter like USA, like exporter just name if I say that is B, and India importer that's name is a. Okay, so just B just want the money from the A like in the US dollar, while the importer A want to give the money from the goods of the, or say money for the goods like in the Indian currency, that is rupees. Okay, so now the problem is like how we can convert one currency into another currency, right? That's why we have to understand foreign exchange arithmetic. Okay, so like if we are talking about the foreign trade or international trade, so the exporter supplies the goods, and the importer has to make the payment of the price of those goods. Okay, or say the money of those goods which is imported. Okay, so but the problem is importer will make the payment in its nation's country. Like if it belongs to India, that means he will just want to payment in the rupees, and the exporter will need the payment at its nation's country like US dollar. Okay, so that's why we have to understand the foreign exchange arithmetic. I hope it is understandable for everyone. Now we are going to understand some very important fundamentals of the foreign exchange. So basically there are three fundamentals of the foreign exchange. Like almost like if we are talking about any country, like okay, so almost every country has its own currency. If we are talking about India, so India's currency is rupees. If you're talking about USA, so USA's country is US dollar. Okay, so that's how we can say like like almost every country has its own currency and useful possession of that currency, so can normally be had only that country in which it is in continuation. Understandable? It is this fundamental is a very important. So if you're talking about like almost every country has its own currency, and the possession of the currency like can normally be had only in that country. If we are talking about India, so it will be just belongs to India, not only for any other country. Okay, so that is some very important fundamentals of the foreign exchange, or this foreign exchange. Okay, the second important fundamental, that exchange of currency take place through the bank. So whenever we have to understand the conversion of the currency, that means that will take place through the banks. So that is another second fundamental of the foreign exchange. The third fundamental of the foreign exchange, that almost all exchange of the currency, like almost all exchange of the currency for one or say for another, are effected with the help of the credit instrument. Okay, so we can say that with the help of the credit instruments, like this is a credit instrument if we are talking about. So whatever the exchange of the currency place is going to be done, that all affected through the, or that all affected with the help of the credit instrument. So these are the three basic fundamentals of the foreign exchange. Okay, so I hope it is understandable for everyone. Now we are going to understand another important concept of the foreign exchange arithmetic, that is direct and indirect quote. Okay, so what is direct and what is indirect quote? And from this you are definitely going to get 1 to 2 questions in the examination, because from the foreign exchange arithmetic you are going to get the numericals, as well as you are going to get a theoretical questions that are of the point 0.5 marks, right? So numericals you are definitely going to get in the 2 marks, and in the theoretical you are going to get a point 0.5 marks questions, so that is also very important. Okay, so just remember that this point 0.5 is a very important, just do not underestimate this, because if anyone is going to get 49 marks in the examination, and suppose that any point 0.5 marks like it would be correct, so that would be just your 50 marks. So that is very important to understand that point 0.5 marks question is also very important. Okay, so now understand direct and indirect code. What is direct and what is indirect code? So whenever we are talking about direct quotation, that is means like when we are talking about like 1 unit of the foreign currency that is expressed in terms of the domestic currency, then it is known as a direct quotation. So like it names like direct quotation, like when the 1 unit of the foreign currency, that means 1 unit of the foreign currency, suppose that we are talking about like US dollar and Indian rupees. Okay, so suppose that we are talking about this, like we often just read US dollar and Indian rupees relationship in the market. Okay, so that's we are going to understand by example that direct quotation is when the 1 unit of the foreign currency. So if you're talking about a foreign currency, that means this would be 1 US dollar and it would be expressed in terms of the domestic currency. So domestic currency, our domestic currency is the rupees, is Indian rupees. So if we are talking about the currency price, that is 76.28 rupees. Okay, so that is the relationship between the US dollar and the rupee. So that is known as a direct quotation. Okay, so in this, like 1 unit of the foreign currency that is expressed in terms of the domestic currency, that's why it is known as a direct quotation. And in the examination you are definitely going to get a multiple options that are written like this, like, and you have to asking for like just find out, or say just find out the wrong option or find out the right options for the direct quote or for the indirect quote. Okay, like, and if opposite of this direct quotation, that indirect quotation, in the indirect quotation, when 1 unit of the domestic currency that is expressed in terms of the foreign currency. What it means, it means like 1 unit of the 1 unit of the domestic currency, and our domestic currency is Indian rupees. So then 1 Indian rupees when it is expressed in terms of the foreign currency, so foreign currency, that will be equal to 0.013 US dollar. So that would be your indirect quotation. Okay, I hope it is understandable for everyone. Now just understand with a very good example. I'm just going to tell you a very good example to memorize, like what direct and indirect quote, and from that you are never going to be forget what is direct and what is indirect. Okay, so just understand that. Let me remove all this. Okay, so suppose that this is you and this is me. Okay, and you are just asking me that what is the current price of the rupees and dollar, okay, in the market. And I am just going to tell you that currently 1 rupees is going to be equal like 0.013 US dollar. Okay, that is currently just trading in the market between the rupees and dollar relationship. Okay, so you just told me that please do not tell me in the indirect way, just tell me in the direct way. Okay, that's it. This is the relationship between the direct and indirect code. So you are going to tell me like just tell me in the direct way. So I am just going to tell you in the direct way, that is 1 US dollar will be equal to, that is your 76.28 rupees that is currently trading in the market. Okay, so you can understand now that what is direct and what is indirect. Suppose that you ask me what is the US dollar and rupees that currently trading in the market, and I just told you that 1 rupees that is equal to this. So you just tell me like you just explain me that this is not the direct way you are telling me. Just tell me in the direct way. Okay, so after that I am just telling you like 1 US dollar that is equal to 76.28. So that is known as a direct and indirect quote. I hope it is now understandable for everyone, right? Now we are going to understand another thing, that some basic exchange rate arithmetic. So in some basic exchange rate arithmetic, we are going to understand what we understand by the value dates, what is value dates, what is chain rule, what is cross rate. Okay, so that's all we have to understand. And you know, all questions that you have to going to solve in the foreign exchange arithmetic, that all depends on this. Okay, so first that you have to understand these terms like value date, chain rule, cross rate, what it means, right? So first we are going to understand value dates. Okay. So what is the value date? And in the value date, we are going to understand a very important thing, that is deal date. You are going to understand that is deal date, or you can also say that date of deal. Okay. So just understand with the example. Suppose that this is you and this is your friend, or say this is you and this is your friend. Okay. So you just live in the India and your friend lives in the Europe. Okay. This is your friend who lives in the Europe and who you lives in the India, and you just want to convert, or say you just want to remit some money from India to Europe. Okay. So definitely you have a Indian currency. Okay. And you just want to just send your friend whatever you want to send the money, that would be in the euros. That would be, you just have to remit rupees, that should be sent to your friend in the euros. Okay. So you just went to the bank. You just went to the bank and you just ask for the conversion of the currency, like this is the money, and just convert my rupees into the euros. You just told this thing to the bank, and that day when you just go to the bank, that day is known as the deal date, or say date of deal. That's it. So the day when you went to the bank for conversion of the currency, that day is known as a deal date. Okay. And after that, for understanding the value dates, it would be just cake work for you. Okay. So just understand the very first term, that is date of deal or deal date. So suppose that this is you, this is your friend, and you want to send your friend some money, and your friend lives in the Europe. So that's why you want to send your friend in the euros, your money in the euros. So that's why you just went to the bank and just asking for the conversion of the currency. Okay. So that day is known as a deal day. Now, according to this, we have to understand some different exchange rate. Okay, and that depends on the date of the deal, or say deal date. Okay, so suppose that if you're talking about any Indian currency, okay, and we are talking about any Indian currency which we are going to convert into Europe currency, which is euro. Okay, so like we want to convert Indian currency into Europe currency, and that's why the deal date, that is your depends, like when you are just going to the bank, that is known as the deal date, because you are asking for the conversion of the currency. Okay. So if the bank is going to convert your currency into another currency, or say your Indian currency into Europe currency, the same date, that means the deal date, then the rate will be applied, that would be known as the cash rate or ready rate. Okay. This is your ready rate. Okay. So look, let me just erase all the things here. 1 minute. Okay. So when we are talking about the deal date, so this is the deal date, and when the bank is going to convert the exchange of the currency the same day at the deal date, then the rate would be applied, that is known as the cash rate or ready rate. Okay. Now, if the bank is going to convert your currency, like into one currency into another currency in the next working day, okay, that's it's a very important thing that you have to understand. This is the one working day. Okay, whenever we are talking about that is working day. Okay. So if the deal date plus one working day if you're talking about, then the rate would be applied, that is known as the tomorrow rate, or say TOM, TOM. Okay. So then this rate would be applied, right? Whenever the bank that or say whenever your exchange of the currency that take place deal date plus 2 working day, then the rate should be applied, that is known as the spot rate. That is most important, and most of the times you are going to get these type of the questions in the examination. Okay. So whenever the exchange of the currency that take place on the second working day after the date of the deal, then it is known as the spot rate. Okay. Now, after the spot rate, whenever your conversion of the currency take place, that doesn't matter. Okay, it would be understand, or say if the rate would be applied, that would be forward rate. Okay, that means after 2 working day, deal date plus after 2 working day, or you can also say that after spot rate, after spot rate, whenever your conversion of the currency going to take place, that is known as the forward rate. Okay, so that is a very important things that you are going to understand in the some basic rate exchange, some basic exchange rate arithmetic. Okay, so I hope it is too much understandable for everyone. So that is a very important thing that because from that you are going to get multiple questions in the examination, and that is known as the value dates. Okay, now in the next lecture we are going to understand what is chain rule, what is cross rate, and how to solve the questions in the examination. Okay, so that's all for this session. I hope this session is useful for everyone. And once again I would like to say, our target batch that is started, and your AB class is going to start from the 11th of April. Okay, so now I'm going to show you how you can enroll in a target batch, because this target batch is a very important if you are aiming for this upcoming JAIIB examination. Okay, because this is a not a exam where you can get the easy moderate question. Here you have to be a fully focused on the basic concepts of every subject. Okay, and that all you are getting in our target batch, like you will get everything like mock test, ebooks, as well as the live sessions. Okay, and that's a very important for clearing your examination. So now I'm just showing you how you can enroll in a target batch. So you just first have to visit the Adda 247 website. Let me show here. Okay, so this is your adda247.com, that is your website, and after that you have to go to the JIB CIB section, where you can find the JIB CIB and another competitive examination related videos. Okay, so you have to go to the JIB section, where you can find multiple batches that is actually running for you. Okay, you can enroll in any kind of the batch, and meanwhile you can also enroll in any particular batch like PPB, LRB, AFB. Okay, so I'm just talking about, if I'm talking about the new target batch that is already started, and your AB class is going to start from the 11th of April. Okay, so you have to simply just go to the JIB target batch, and where you can find multiple things that is equally important for you, like mock test you are getting, ebooks you are getting, and 130 hours live classes you are getting. And the most important thing that the study plan, like PPB study plan, AB study plan, and LRB study plan, you all are going to get this. Okay, after that you have to go to the buy now section, where you have to use the code that is Y422. Let me write here. So you have to use the code Y422, and with this code you are going to get a maximum discount. Okay, so you can see now the price is so much reduced, and this is a very right opportunity that you all should enroll in our target batch. Okay, because this is only one time investment, right? So now I would like to say thanks for watching me here. Thanks for joining me here. Like this video if you're liking our effort, liking our content. Share this video to your friends so that maximum number of our colleagues can join with us. So once again, thanks for watching.